again.
So welcome to all of those of you who are here. We're just gonna wait a little minute until everyone has tuned in, and then we'll get started. All right, I think we're gonna start. Welcome everybody, and good afternoon. Welcome to this masterclass. Thank you for tuning in. This is the second masterclass out of 3 that we at Energistyrelsen, the Danish energy agency, are hosting together with Nordic innovators. These classes are sponsored by Energistyrelsen, the Danish energy agency, and they aim to give you tips and tricks on the EU Innovation Fund, and to make sure that you are as equipped as possible with the latest information on how to prepare an application for the fund. My name is Olivia Thompson, and together with my colleague Klaus Andersen, whom some of you may have seen at the first webinar, we are the official national contact point for the Innovation Fund here in Denmark. We are based in the Energy Agency's Team EU Funding, which is a team that was established 2 years ago, where we have the mission to support the Danish applicants and the Danish companies that are applying to the EU Innovation Fund. Right now, a lot is happening. It's a very interesting time within the Innovation Fund. 2 weeks ago, on November 3rd, we received the results from EU Innovation Fund 2024. And in about 2 weeks' time, on December 3rd, the next call will launch. So this is indeed very exciting times. And we are very happy to see that Denmark got 3 innovative projects that was awarded and are now being invited for the grant agreement preparations. And these 3 projects that have been awarded have a total of 1.5 billion kroner. So we're very happy to see those, and that Denmark are still in the top 10 actually of countries with the most awarded Innovation Fund projects. And this year the competition, it's been very hard with the budget that has been half the size of last year, but all the more reason to pay extra attention to this webinar, and as well as the other services that we at Energistyrelsen are providing in order to support the Danish companies that are applying for the Innovation Fund. So a bit about what we at the Energy Agency are providing. First of all, we host this National Info Day together with SENEA here in Copenhagen, Denmark, where SENEA will be visiting us, and they'll be providing information, all the newest information on the 25 call. And in addition to this, we'll have these one-to-one orientation dialogues with a closed door, which is an opportunity for applicants to ask critical questions around your application to SENEA. And this, the next National Info Day will be on January 15th, 2026. So January 15th, 2026. And in addition to that, we host these masterclasses, as you know, and then we have these validation assessments where you can get up to 25 hours of external consultancy help sponsored by the Danish Energy Agency, where they can value your application up against the evaluation criteria to make sure you have a strong application to apply with. Then we also have this financial support fund that we have opened as of 1st of September, where you can apply for up to 500,000 kroner to cover the costs of developing a competitive innovation fund application. And for more info on these services, you're welcome to browse our website or to contact us directly, and the slides will be distributed after where our contact information are. And if you do want to, we'll send out the invitations for the National Info Day soon, and the link where you can sign up will also be on our website. And then we'll send it out to our email list. So if you're not on that, but you would like to have the latest information from the Danish Energy Agency on our events and news on the Innovation Fund, then feel free to write to me. My email are in the slides that'll be sent out. Yeah, and lastly, I just wanted to include a timeline over what's going to happen forward from now. As we know, I'm not going to go into depth with all the dates. You can look at that later, but just highlight the most important ones. That December 3rd is when the call opens, and then in December as well, the 10th and the 16th, we'll have the CINEA online information days, both on the auction as well as on the call. And then we hope to see you again in January 8th for the third and final masterclass. And then, of course, on January 15th for our National Info Day. And with that, I just want to give the word to Nordic Innovators and wish you all a fruitful session.
Good afternoon, everyone. Many thanks, Olivia, for your introduction, and thanks again to the DEA for giving us the opportunity to walk Danish applicants through the EU Innovation Fund program. Before we begin, I would like to remind you that this session will be recorded, and you will receive the presentation and recording after this masterclass. Also, please free to drop all your comments and questions throughout the whole session, and we will look at them after our presentation and address them during our final Q&A. Let me introduce our team for today. My name is Filippo Contenti. I am partner and co-leader of the business unit on energy, climate, and circular bioeconomy at Nordic Innovators, together with my colleague Felix Urbain, who is a postdoc in renewable energy and energy storage. Yuki Nakamura is Senior Associate at Nordic Innovators Corporate Finance. She has a Master in Business and Finance and CPA title. And finally, Jan Redzek is the Managing Director of Nordic Innovators Corporate Finance. Let me have a few words also on Nordic Innovators Group and our business unit. We are a trusted financing advisor covering the whole financing need spectrum of large capex projects related with industrial decarbonization and green transition. We have framework collaboration with key industrial clusters, top-tier research organizations and universities, large corporations and deep tech SMEs across both the Nordic and the whole European territory. And together, our team combines a unique blend of technical and financial competencies, which enables us to comprehensively address all the aspects involved in the successful preparation of a new innovation fund proposal in industrial domains such as carbon capture and storage, energy-intensive industries, net zero mobility, or renewable energy and hydrogen. Over the last Innovation Fund round, our team has supported overall 5 successful project proposals and 2 additional projects in the reserve list to be deployed across countries such as Norway, Denmark, Germany, and Portugal. The overall funding achieved by this project is more than 360 million euros, with a total investment of 1.4 billion euros. In this second webinar, we will summarize the learnings from the previous sessions in regards to the EU Innovation Fund's objectives and structure, its mechanisms, our criteria, and application documents. Secondly, we will also make an in-depth analysis of the program application documents with a special focus on the ones calculating the greenhouse gas emissions avoidance and the project financials. Later, we will also look at how to respond to the award criteria across the different application documents. And the key learning that we pretend to achieve by doing this are to understand the Innovation Fund key application documents and rationale, to learn how to address the Innovation Fund award criteria across the different application documents, and to gain specific insights for preparing a compelling application. I also take the chance to remind, as already introduced by Olivia, that the next webinar will be celebrated next year on the 8th of January, and it will complete our overview of the Innovation Fund by focusing on the specific tips and tricks to prepare a winning project. Let's now go through the agenda for today. It will consist of 7 sections. We'll begin with a brief recap of the first webinar, reminding the Innovation Fund purpose, its eligibility and overall process. We'll then provide an overview of the application documents, explaining the different application annexes, what the different application annexes requires. We then take a deep dive into the greenhouse gas methodology, including how to calculate the emission avoidance and use the EU Innovation Fund template. And after that, we will examine the support, with the support of our colleagues from Nordic Innovators Corporate Finance, the key financial documents, including the detailed financial model and the financial information file template. Thereafter, we will focus on how to fulfill the award criteria and what evaluators look and how to structure your narrative. We will finally close with a wrap-up on the key takeaways of today's session, and this will be followed by a Q&A open discussion. As we learned in our previous session, the Innovation Fund uses 5 award criteria to score applications with a maximum of 76 points available in the case of the next net zero technology general call. The first criterion, the degree of innovation, is worth up to 15 points and assess how your project goes beyond the current state of the art. The second, the greenhouse gas emissions avoidance, provides 12 points, which is broken down into absolute avoidance, relative avoidance, and quality of the greenhouse gases avoidance calculation. The project maturity covers the technical, operational, and financial readiness and can score up to 15 points. The replicability measures the potential for wider deployment and industrial impact and contributes to another 15 points. And the cost efficiency adds 15 points by examining the grant request relative to the emissions avoided. Finally, there are also bonus points, up to 4 points, that address specific project features, such as the fact of focusing on the maritime sector. This table summarizes the minimum scores required for each criterion and the maximum points that can be attainable. For example, the degree of innovation must score at least 9 out of 15 to pass, while the greenhouse gas avoidance requires a minimum of 3 out of 5 points in the quality of the calculations. The project maturity is divided into technical, operational, and financial sub-criteria, and each of these sub-criteria has its own minimum threshold of 3 points. Cost efficiency, for instance, has a threshold of 1.5 points out of 3 in the quality of the calculation of the relevant cost. It is important here to remind that failing to meet any threshold will exclude your proposal regardless of its performance elsewhere. So all criteria need to be addressed comprehensively. Preparing a successful Innovation Fund proposal requires assembling a complex set of documents. The central narrative lies in the Part B of the application, which has a 70-page limit, and it explains your project concept, innovation, greenhouse gas impact, maturity, replicability, and cost efficiency. In addition, there are also several key annexes, like the feasibility study and business plan, both of them with a 60-page limit, and complementary documents that are complementary respectively to the feasibility study and the business plan include the greenhouse gases avoidance calculator, as well as the relevant cost calculator and the financial information file, and the detailed financial model that detail your financial model, and all of them are to be submitted as Excel files. Additional supporting annexes address contractual agreements, due diligence reports, environmental permits, also the Gantt chart and letters of support. Finally, you also need to submit the Part C form, which captures the key performance indicators, and the Part A, which contains administrative and participant information on the European Commission portal. We will unpack each document type over the next slide. The diagram here shows how the various documents interrelate and respond to specific award criteria. Part B is the narrative document, and as such, it is connected to all of the supporting annexes. The feasibility study and greenhouse gases calculator, containing technical and economic analysis of the project and the emissions estimates, the emission avoidance estimates, are aimed at justifying the project's degree of innovation and first-of-a-kind nature, and they also aim at justifying the project's technical and operational maturity, as well as, of course, the greenhouse gas avoidance. The financial information file and detailed financial model are focusing on describing the CapEx, OpEx, cash flow and revenue projections, as well as the project financing plan. And they are linked to the project financial maturity. The business plan illustrates the project's value proposition and its market potential, as well as the narrative description of the project's financial figures. And as such, it is also linked to the project financial maturity, but also to the replication potential. Other annexes, such as the Gantt chart and participant information file, also support and reinforce the project credibility and readiness. Let's now analyze each application document a bit more in detail. We will begin with the Part B, which is the main skeleton of the application. First of all, it is important to remark that it is compulsory to use the official SINEA template and make sure that this is also the most updated one, as it may happen that SINEA released new documents after even publishing the code in December this year. Let's break down the Part B. The first section introduces the project and applicants, summarizing the concept, objectives, and consortium structure. You will also have to describe afterwards the degree of innovation, where you benchmark your technology against both commercial and technological state-of-the-art, and explain how your project goes beyond it. There are other sections covering the greenhouse gas avoidance, where you describe your reference scenario and your project emissions and calculations. And this, of course, is linked to the greenhouse gas calculator annex. Following this, the project maturity is breakdown into these three aspects: the technical maturity, so technological readiness, demonstration performance; the financial maturity, so the business plan soundness, the financing, and the operational maturity, including, for instance, the permits, the public acceptance, all the preparatory work for carrying out the project. The Part B, as a summary document, also addresses the replicability potential of the project, the security of supply, meaning how your project safeguards the supply of critical raw material and addresses potential supply chain dependencies of the EU, if applicable, of course, for your project. And then the cost efficiency, where you have to calculate the cost per ton of CO2 avoided and justify your requested grant. Then there is a specific section on the bonus point, whenever they are applicable for your specific project. And the Part B also contains the full description of your project work plan, where the key activities across the three phases of activities until financial close, until entry into operation, and during the operation period are described. The official SINEA templates for the Part B include also detailed instruction on the information that must be provided in the Part B. So we have to make sure that we address all the requirements, all the specifications that are included in each of those detailed instructions. So, for instance, we are dropping here an example of the innovation in relation to the state of the art, where, of course, we need to include the state of the art of the solutions that the project wants to demonstrate, the characteristic of other commercially available processes, and how the project goes beyond the state of the art, goes beyond the specific performance figures of already available solutions. Now, as for the case of Part B, we now address the feasibility study. And as for the case of the Part B, since the last call of 2024, SINEA also provides specific templates for the feasibility study and the business plan annexes. Through its use, though its use is still optional, these are, of course, highly recommended, rather than using the own applicant version. The feasibility study provides the technical foundation for your project, and the project descriptions should include background information, objectives, site characteristics, and resource or feedstock availability. The location analysis explains why the chosen site is suitable in terms of its proximity, for instance, to resources or to feedstock. What is the permitting environment and other logistic considerations. The project's objectives should highlight the expected outputs in quantitative terms, such as the envisaged production volumes. And the technical assessment is where you describe your technology's process, indicating its inputs and outputs, the equipment suppliers, and the corresponding TRL levels, among other aspects. The expected output section should quantify production volumes, energy use, and emissions over time. And the techno-economic analysis must demonstrate the project viability at scale, including the efficiency gains brought by the project once the technology will reach the commercial rollout phase, and backing up its replicability from the technical perspective. Lastly, a risk analysis and management plan identifies the technical risks and also assess their likelihood and impact, and especially outline mitigation measures to address them. Let's now jump into the business plan. Again, here, it's an important reminder to use the official SINEA templates, not your own ones, though they are optional. It is highly recommendable to do so. The business plan begins with the business proposition, which outlines the value your project brings, its unique selling points, the customer segments, and the market problems solved by your technology. The plan must detail financial assumptions such as CapEx and OpEx categories, price forecast, discount rates, depreciation method, providing the underlying assumption of the financial figures of your detailed financial model and relevant costs calculator. The strategy for securing contracts should explain your approach to feedstock procurement, engineering procurement and construction, and especially the offtake agreement. This is backed up by other annexes, such as the letters of intent and terms from suppliers and customers. The cash flow forecast normally covers at least the first 10 years of operation, though the project lifetime in most cases may extend until 25 years or more. The financing plan describes the mix of financing means used to finance the project, including then equity, debt, grants, as well as, of course, the revenues generated upon the entry into operation of the project. And it needs to show clear evidence of investors' commitment. Lastly, again, there is a risk management section also in this business plan, and it analyzes, of course, the business and financial risks and maps them to specific mitigation measures for each of them. Greenhouse gas calculator. Well, in order to quantify the emissions reductions of your project, you must use the greenhouse gas calculator template provided the Commission, which is an Excel file. The calculator compares your project scenario against a reference scenario that reflects current practice of the most plausible alternative to your technology. There are several tabs in this worksheet, in this workbook, like the summary providing the overall results, the reference emissions, which defines basically the baseline assumptions of the project in the reference scenario, And the project emissions that calculate the emissions for your proposed technology, including, for instance, direct process emissions and indirect emissions from energy use, and then conversion factors and assumptions. We will deep dive into this greenhouse gas calculator later with my colleague Felix. The detailed financial model should provide an internal detailed we should provide an internal detailed financial model besides the official template of the European Commission, which is the financial information file. And the model should be adapted to isolate the specific project finances, including only the DevEx and CapEx costs sustained from the signature of the grant agreement, or as a minimum, from the month after the submission of the proposal. So to enable evaluators to follow the logic of your costs and revenue assumptions. The model can be composed by several different sheets, depending on how it's built, but the minimum contents should include the production volumes and revenue assumptions, the main cost assumptions broken down in CapEx, OpEx, and COGS, the financing plan and project financial statements, as well as a detailed sensitivity analysis considering different scenarios, such as potential variations, for instance, in the costs, prices, production volume, or other potential financial risks. The financial information file is the mandatory Excel template provided by CINEA, and it has mainly two purposes. From one side, to calculate the relevant costs, and therefore the maximum grant amount that you can request for, and from the other, to assess the financial maturity of the project. It has to be, of course, tightly linked and fully consistent with the detailed financial model, and it begins with this financial model summary tab, indicating, among other aspects, the project start date, the timeline, and weighted average cost of capital, so-called WACC, and also define the project's full operational lifetime. In the following slides, my colleague Yuki will deep dive into this template. Here it is just important to remark that we only need to focus on those blue tabs of the summary, the CapEx, the relevant cost, and the grant breakdown inputs, as the other ones will be automatically filled with such inputs. A clear Gantt chart is also required as part of the project proposal, which needs to be fully consistent and aligned with the project work plan that is described in the part B of the application. It has covered the entire project life cycle, from preliminary engineering and permitting through the construction and commissioning to full operation. And these are practically defined as we were introducing at the beginning as the activities until the financial close, until the entry into operation, covering the CapEx period and the following operation period. It is fundamental to mark key milestones, such as, for instance, the financial close, the start of the construction, the equipment installation, commissioning and ramp up. And it is also worth reminding that the grant disbursements, in the case of the EU Innovation Fund, are triggered by the achievement of specific milestones, such as, for instance, the financial close. In addition to the core annexes, you can provide evidence of thorough preparatory work of your project within the other annexes files. Among others, for instance, you may attach here previous feasibility studies or conceptual design reports, which can demonstrate the evolution of your project concept and provide the baseline data. Execution plan, for instance, may outline how the construction and commissioning will be managed, whereas, for instance, a life cycle assessment or environmental impact assessment may show that you have considered wider environmental impacts beyond the mere greenhouse gases emissions. Joint development agreements with technology licensors or partners may clarify, for instance, the intellectual property rights inside the project, the responsibilities, or the revenue sharing. And yeah, safety data sheets or product specification sheets, for instance, ensure the regulatory requirements have been considered, among other aspects. Other potential annexes, recommendable annexes in Innovation Fund are the due diligence annexes, as the projects in the Innovation Funds are normally first-of-a-kind deployments. So independent due diligences may also represent a valuable annex. This can take the form of technology assessment performed by third-party engineering consultancies, or, for instance, front-end engineering and design study that provide detailed layouts, equipment lists, and cost estimates illustrating the proposed technology, how can the proposed technology be built and as described. Other potential annexes, other optional annexes that are recommendable to be uploaded to add on credibility on the project and show this technical, operational, financial maturity are, for instance, the contractual and permit annexes. These are practically compulsory to back up the project credibilities, as they deal with the contracts and permits. So supply agreements with feedstock suppliers show security of supply and also price certainty. Supplier code of conduct may be required if your suppliers must adhere to sustainability or human rights standards. And then permits and licenses, such as, for instance, the building permits, environmental authorizations, land reservation agreements, demonstrate that you have considered the regulatory requirements and obtaining also the necessary approvals, and that these permits are realistic to be achieved, to be obtained within your project timeline. You may also involve, for instance, experts in permitting processes, or a consultant letter confirming that your permit strategy is sound and can reassure, of course, evaluators. While, of course, not every permit must be in place at the submission, the more evidence you can provide of progress, the higher your operational maturity will score in this aspect. Another compulsory file is the participant information file, which is an annex containing information of the company, its business activities, competencies of the team members, and previous experience in executing large-scale innovation projects. Therefore, this file allows evaluators to assess the capacity of the applicants to deliver the project and to manage large-scale investments. It should also explain the role of each partner in case you are applying in consortia. The other supporting annexes, well, there is this support to the project annex, where, needless to say, evaluators' confidence increase when they see tangible commitment from key stakeholders. So project may and actually should include letters of support from shareholders, board members, off-takers, suppliers, technology providers, or public authorities. These should be signed by authorized individuals and specify the nature of the support, whether it's an intention, for instance, to supply the feedstock, to purchase the output, to co-finance the project, or facilitate permitting. It is also important to avoid generic endorsements, so letters should reference your project by name, indicate the volume or value of the commitment, and specify, of course, the conditions. For example, an off-taker might commit to purchasing a certain tonnage of green hydrogen at an agreed price, conditional on final contract negotiations. And now let's move to the most administrative annexes. Let's begin with the Part A, which is a form that is completed directly on the European Commission's portal. It includes information such as your project acronym and title, and a brief abstract and keywords. The Part C, finally, is also completed online and captures key performance indicators of the project, including, among others, the absolute greenhouse gas avoidance and the private and public financing overall mobilized by the project. You must specify the project location and also the type of project, for instance, energy-intensive industry, renewable energy, and so on. It is important to make sure that the figures you provide here correspond exactly to those in Part B, the greenhouse gas calculator, and the financial models. And now let's have a more in-depth look at the greenhouse gas calculator template and the EU Innovation Fund methodology. For this, I leave the floor to my colleague, Felix.
Thank you, Filippo. Also from my side, a warm welcome to all the participants of this webinar. So when it comes to the Innovation Fund, as we all know, one of the key aspects is showing how your project reduces greenhouse gas emissions compared to a conventional alternative. To do this properly, the Commission expects applicants to follow a clear, structured methodology. And that's what you see here on this slide. So we have to start with understanding your project, what exactly it does, where the emissions occur, and what parts of the value chain are actually affected. Next, we classify the project and identify which GHG calculation methodology applies. The Innovation Fund provides a set of methodologies, for example, one for emission avoidance, one for energy efficiency, and one for carbon capture and storage. And choosing the right one is crucial because it defines what's inside and outside your system and project boundaries. Then we move on to understanding which emissions are covered and setting the boundaries of the calculation. In other words, which processes, inputs, and outputs are included in your analysis and which ones are excluded. After that, we need to identify the reference scenario. This is basically your baseline. So what would happen if the project did not exist? Once these steps are clear, we can complete the GHG calculators. This is where the numbers go in, based on real data and reasonable assumptions. And finally, we then upload the completed calculators to the EU portal together with your proposal. At the bottom of the slide, you see a reminder, follow the provided methodology. For most large-scale projects, that's the GHG emission avoidance methodology, which gives detailed guidance on how to perform each of these steps consistently with the Innovation Fund's rules. Now, this next slide gives a quick overview of the sectors eligible under the Innovation Fund. So which projects are supported across 5 main categories. First, we have energy-intensive industries, which includes sectors like cement, steel, chemicals, hydrogen, and refineries. Basically, the industries where cutting emissions can have a huge impact. Then there's renewable energy, covering technologies such as wind, solar, hydro, geothermal, and bioenergy, as well as manufacturing components that make these systems possible. We then also have energy storage, ranging from intraday electricity storage to other innovative solutions that help balance renewable supply and demand. The mobility sector then includes maritime, aviation, and road transport, so the areas that are hard to decarbonize, but indeed crucial for achieving the EU climate goals. And finally, the buildings category, focusing on improving energy efficiency and reducing emissions in the building sectors. Together, these categories show that Innovation Fund is indeed not just about energy generation. It's about transforming Europe's industrial and transport systems towards climate neutrality. Now, once you know which general sector belongs to your project, the next step is to find the correct GHG methodology in the call text. The Innovation Fund call text includes a table, such as the one shown here, that links each category and product type to the corresponding GHG methodology section of the call text. The process then is quite simple. First, you identify your project's main product or output, for example, cement, hydrogen, steel, or e-fuels. Then look it up in this table to find which sector and section number applies. Let's take the example highlighted here, cement and lime, under energy-intensive industries. When you find cement in the product column, you'll see that it falls under section 2 of the methodology. That means that your GHG calculation, you need to follow the rules and formulas described in the section 2 of the GHG emission avoidance methodology document. This step is highly important because it ensures that all applicants use a consistent and comparable approach, which directly affects how the GHG impact will be evaluated. So in short, identify your product, match it to the right section in this table, and then follow that section carefully throughout the GHG calculation. In the Innovation Fund methodology, everything starts with comparing two scenarios, the reference scenario and the project scenario. The reference scenario is your baseline. So it represents how much CO2 would be emitted and what would happen if the project didn't exist. So for example, a process or production, as it might continue using a conventional fossil-based process. The project scenario, on the other hand, describes what happens with your innovation, the emissions resulting from your new technology or process. The difference then between these two gives you the absolute GHG avoidance potential. In other words, how much CO2 your project prevents compared to a business as usual case. This is the core of the GHG calculation and the major driver of your project's Innovation Fund score. Here then we take the next step, actually quantifying the GHG reduction potential of your project. There are two ways this is expressed in the Innovation Fund methodology: absolute and relative GHG avoidance. Absolute GHG avoidance, as many of you know, is the total amount of emissions avoided thanks to your project. It's simply the difference between the emissions in the reference scenario and those in the project scenario, and it's measured in tons of CO2 equivalent. So it tells us how much CO2 your innovation or your project prevents in total. Relative GHG avoidance, on the other hand, looks at the efficiency of the reduction. It's the same difference, but expressed as a percentage of the reference emissions. This shows how much cleaner your process is compared to the business as usual scenario. And then together, these two figures give evaluators a clear picture, not only on the project's absolute climate impact, but also how efficient and scalable the innovation could be. This slide explains how the GHG monitoring and reporting period fits into your project's overall timeline under the Innovation Fund. From the Innovation Fund start, you begin the official reporting or implementation period, which typically covers detailed engineering, construction until final commissioning and entry into operation until the end of the Innovation Fund's monitoring. That's what we call the Innovation Fund reporting end. In this period, the GHG calculation period extends to up to 10 years of operation, capturing the full climate impact once the project is running at normal capacity. Finally, the project lifetime is usually longer than both of these, but for Innovation Fund purposes, only emissions avoided within that 10 years calculation period are counted. So when you plan your project, make sure that your GHG data collection and monitoring systems are aligned with this reporting structure from the very beginning. Now that we have covered how the GHG avoidance is calculated, let's look at what happens after submission and during operation. When submitting the proposal, applicants must include a detailed monitoring plan. This means documenting all parameters, data sources, and assumptions used in the GHG calculation so they can later be verified. During project operation, all measurements must follow industry standards and use calibrated equipment in line with EU ETS rules where applicable. Then, at the GHG reporting stage, an independent verifier checks the actual emission avoidance throughout the monitoring period and confirms whether they match with what was promised in the proposal. The key point to keep in mind here is that grant payments are tied to verified results. So if the project achieves less than 75% of the targeted and proposed GHG avoidance figures, the final grant amount will be reduced. And if no real avoidance is demonstrated, the grant may even be reclaimed totally. So accuracy, transparency, and credible data are essential from day one. This slide should highlight that CINEA, so the organizing agency of the Innovation Fund, has facilitated several GHG calculation examples to prospective applicants. These are great reference cases which can be of highest value for applicants. Now let's walk through how the GHG calculator actually works. So this is the Excel file every applicant must complete and upload to the proposal. At the top, you'll see the general information section. Here you identify your category, for example, energy-intensive industries or renewables. Select the correct calculator version and specify your sector, in this example, refineries. It's important to always use the latest version of the calculator, which is stated in the call documentation. Based on our experience, Cinea is actually good in modifying the latest version very close to the deadline. So having an eye on the latest version is absolutely recommended. You'll also enter in the Excel file the principal product that represents the main output of your project, such as fuels, including e-fuels or biofuels. The tool then automatically cross-checks that your product and sector are consistent with the GHG methodology, and if everything matches, you will see a green OK flag on the right. Below that, we move into the core of the tool, the absolute GHG avoidance. This section calculates the total tons of CO2 avoided by subtracting project emissions from reference emissions. In this example, the project avoids about 3.9 million tons of CO2 over 10 years of operation. The Excel automatically performs the calculation, so you only need to input the emission data from your modeling or process assumptions. Next, the file also automatically calculates the relative GHG avoidance, which expresses the same result as a percentage of the reference emissions. Here, roughly 84% reduction compared to the baseline process. Again, this helps evaluators to understand not just the total avoided emissions, but also the efficiency of your technology. Finally, at the bottom, there's a step-by-step breakdown of emissions by process stage. For example, input, combustion, change to in use, and end of life. This level of detail ensures transparency and helps the verifier later trace where the main emission savings occur. Starting at the top left of this slide, this table captures your reference emission inputs. Each row is one source. For example, as shown in this table, a refinery combustion stream, and the columns ask for the plant input, process, input and output, and the specific parameters you are monitoring. For example, tons of diesel produced. To the right, you fill the data unit and the annual production numbers for year 1 to 10. These blue cells are where your input or where you put your provided volumes. Important to always double and triple check the units here. So everything must be consistent. Pay attention to units of mass, for instance, ton versus kilogram, or energy, megawatt hour versus joule, or temperature, grad Celsius versus Kelvin, for instance. In the below table, the calculator multiplies those projected volumes by the fossil fuel comparator values to convert activity into actual tons of CO2 equivalent. For information, the fossil fuel comparator values are typically given values by the calculator Excel file. You can see the yearly tons of CO2 equivalent per stream and the green total on the right side in the right column. Finally, then, these reference totals feed the summary tab we have just seen in the previous slide, so to keep them accurate and well documented for the verifier. On purpose, this slide is left barely readable. It should show the project emission tab in its full dimension and should really just be a visual reminder for you that the GHG calculator is not a simple spreadsheet. It's actually a detailed technical tool that requires careful use and completeness. The here shown project emission tab, for instance, mirrors the structure of the reference emissions sheet we just looked at. The difference is that here you input the real operational data of your innovation. The new processes, energy source, or technology that replaces the fossil baseline. Each line again corresponds to a specific process step, and you'll enter your own parameters, emission factors, and production data for up to 10 years. The sheet then automatically calculates emissions for each year and compares them with the reference case to generate your GHG avoidance values. It's very precise, but also easy to get wrong. So always cross-check units, consistency, and make sure every input is traceable in your supporting documentation. The key takeaway here is clear. Treat the GHG calculator as a verification ready document, not just an attachment. So every figure should be defendable and based on evidence. This slide then shows the assumptions tab of the GHG calculator, one of the most important parts of any innovation fund proposal. Here, applicants must clearly explain the basis for every numerical input used in the GHG calculation. Things like energy consumption, process yields, or catalyst use. The goal is transparency. Reviewers must be able to trace where each figure comes from and confirm that everything is credible. Let's therefore take the time and look at a few examples. The first row shows catalyst consumption. For instance, in this case, 42 tons per year. The description explains that this value assumes reapplication every 3 years, and the source is a published annual study on biofuels gasification. The source is even hyperlinked for easy verification for evaluators. And this is exactly the level of clarity evaluators expect. A second example is electricity consumption, listed here as 3.85 million megawatt hour per year. The assumption explicitly states that this value reflects full operation and cites the underlying efficiency used to derive it. Again, the reasoning must be consistent with the project's technical design and energy balance. Other entries include, for instance, water consumption and energy conversion efficiency, each with units, assumptions, and sources. The takeaway here is that every assumption must be quantified, justified, and referenced. So, because this tab acts basically as your project's evidence base. It's what allows CNEA and the verifier to trust that your GHG results are realistic and defendable. Without this level of detail, even a strong technical project can lose points on credibility. And with this deep dive into the GHG calculator, I would like to hand over to my colleagues from Nordic Innovators Corporate Finance to guide you through the financial documents of any innovation fund proposal.
Thanks, Felix. And before we continue, a quick introduction. Jan, I and the Nordic Innovators Corporate Finance team, we work on the financial dimensions of the EU Innovation Fund. We have supported clients in many ways, from lightweight scope review of the financials to help building full detailed financial models, all the way to helping strengthen the financing structure by connecting with banks and securing the level of support. Today, I will take you through two things before we have a quick break. First, how the relevant cost is calculated, and second, how to navigate the and complete the financial info file, or the fifth. Let's start with how relevant costs are calculated. There are two methodologies depending on whether a suitable reference plan exists or not. The first one is called the non-reference plan methodology, which is the default approach used by the Innovation Fund. As shown in the formula here, relevant costs are equal to DevEx plus CapEx, capital expenditure, plus present value or PV of operating expenses, plus PV of maintenance CapEx, minus PV of operational benefits, and minus PV of revenues. So this formula reflects the time value of money concept, meaning that the future cash flows over the first 10 years of operation are discounted using the weighted average cost of capital, or WACC, something that we will look in more detail shortly in the spreadsheet. In practice, this means higher DevEx and CapEx increase the relevant cost, while higher EBITDA, meaning more operational benefit or revenue, reduces them. And importantly, 60% of the relevant cost is the maximum grant amount a project can request from the Innovation Fund. For the second approach is the reference plan methodology. This one applies only if a comparable conventional plan exists, something that could deliver the same output using standard technology. And both methods can apply to projects of any size, whether large scale, small scale, or pilot project. It's time to walk you through how to complete the fifth. On the left, we start with the mandatory submissions. You must submit both the fifth and your detailed financial model. So if you forgot one, it will be an automatic rejection. For your detailed financial model, it's the standard financial model of your project that comprise a 3-statement model: profit and loss statement, cash flow statement, and balance sheet or position statement. Then moving to the center, we have the blue tabs. These are your main input areas. This is where you transfer financials from your detailed financial model into the fifth, including quarterly CAPEX and your grant distribution plan. On the right, we shift to the red tabs. These tabs process everything you enter. They calculate financial metrics, revenue cost, CO2 cost efficiency, summary chart, etc. To make this clearer, let's switch to Excel. I will share Excel now. All right. As you can see that the tabs at the bottom are color-coded, blue for input and red for results. And let's start with the first tab, financial model, summary inputs. Now the mission is to fill in the yellow cell. Start with project name and general info, such as corporate tax rate, unit that you will use, which specify that you have to use 1,000 euro for this, and key dates, such as project start date, financial close, construction period. And for project lifetime from entry into operation, you have to include the whole life of your project, not just only 10 years of the grant period. Then set up your WACC. Remember that this is your project WACC, not your company's. Be careful because many applicants fail here because they use corporate rates or random number. You have to follow the relevant cost methodology guideline for each of the factors. But showing here are 3 default values that specified in the methodology. For beta, the default value would be 1. Equity risk premium is 6% and innovation risk premium is 3%. This one you can pick between 2 to 4%, but you have to justify it. Also, if you wish to use different beta based on your industry, you can do so, but have to follow the value in the methodology appendix, in the appendix only. And for ratio between equity and debt, make sure that your equity and debt split in the WACC matches your financing plan. For example, if your equity is 80% and debt is 20%, you have to keep it consistent, and don't forget that grants are not part of the calculation. Moving on to the later part, for the section 5 is profit loss statement. Here where you will put your revenue, both from market price and green premium you expect to earn, as well as the sales volume of your product. If your projects also generate byproduct or sales of CO2 emissions allowance, those should be filled in here as well. The next part of the section cover cost of goods sold, OPEX, operating expense, and SG&A. All of these input will later feed into the relevant cost calculation. After completing this, you will continue with section 6 for the cash flow statement and section 7 for the balance sheet. And make sure that you align this with your detailed financial model. For the next step is CAPEX input. This is your construction cost breakdown done quarterly, which is different from the first tab that you have to done annually. But this one you have to make it into quarterly. This includes construction costs, site infrastructure, development costs, and intangible assets. Watch out that there should be no cost incurred before submission and also no cost after entry into operation, since those are not eligible costs. And for the third tab, RC inputs, this tab is only for using the reference plan method or the plan B. So if you change this to reference plan, that will show input that you have to fill. So you have to fill WACC for reference plan and revenue, CAPEX, OPEX, and maintenance CAPEX. But if you are using no reference plan, then you can skip this tab. Now the important part, grant breakdown. So first you can check your relevant cost after fill all the first 3 tabs. You can check your relevant cost calculation. Let's say that it's show here 100 million. So before I go into that here, if you remember the formula that I showed earlier, here will automatically calculate relevant cost for you. So if it's show here 100 million euro as a relevant cost, then the maximum innovation fund grant you can claim is 60%, which means 60 million. But maybe you want to request only 25 million. That is okay. And here there will be some rules that you can that maximum 40% of total relevant cost can be paid before financial close, and at least 10% must come after the entry into operation, and the rest can be spread across construction period. And the column Q here asks the distance in month from the start date, so you have to fill it right. And that's all the input tab. Let's move to the rate tabs here. So the first one, financial model summary sheet here, will show profit and loss, balance sheet, cash flow, and also IRR without grant and with grant. And at the bottom, it will also show debt service coverage ratio, DSCR, in case that your project has debt as part of your financing plan. And the relevant cost, I already walked through this a bit, but this will be auto-select data for the first 10 years of operation and calculate relevant cost for you. The next one, cost efficiency calculation. It's calculate your cost per ton of CO2 avoided, so you can see how efficient your project is. Summary chart here will show all the KPIs of your project, such as NPV, IRR, revenue, cost of goods sold, and all the visualized chart and bar and graph. And here will show your CapEx, and this part will show source and use of fund. And for the model check, think of this as your project health monitor. It's like any broken formula, mismatch, unbalanced balance sheet, it will show here. So make sure that you clear all the errors before you submit the fifth. All right, so that's bring us to the end of the Excel. Let's go back to our slides for the summary of this section. So overall, if the fifth is your project financial story. Based on past experience, it's easier to start with the first version of detailed financial model linked with the fifth and then gather the support evidence. You may need to fine-tune the assumption along the way, but having detailed financial model upfront will clearly show what information needs to be collected and remaining gaps, where the remaining gaps are. And the key is to be accurate, consistent, and provide strong justification for all assumptions, especially when it's come to WACC and identifying what counts as eligible costs. All right, we will now going to take a 15-minute or 10-minute break before we move to the next part, deep dive how to fulfill the award criteria by Felix. So let's meet again at 14:13.
Okay, let's give everyone 1 more minute, and then we'll continue. All right. Yes, welcome back, everyone. I hope you had a good break. Let's pick up where we left off and continue with the next part of the session, which will consist in providing you with key insights of how to convince evaluators regarding the specific innovation fund selection criteria. In this, or among the 5 main selection criteria, the degree of innovation is the very first gatekeeper criterion in the innovation fund evaluation. This means that if the proposal fails here, evaluators will not proceed to the next parts of the proposal. As we all know, the innovation fund supports projects that go beyond incremental improvement. Hence, we're talking about innovations that represent a step change in technology, design, or process, and that can be demonstrated at pre-commercial or commercial scale. So when writing this section, the applicant needs to clarify whether the project, first of all, is not yet commercially available, and secondly, that it brings a real advancement compared to what currently exists in the market or in other innovation fund awarded projects. Think of this as setting the bar. If your innovation is simply an optimization or small efficiency gain, it will very likely be judged as incremental and will likely fail this gate. Now, on the next slide, we'll see how do evaluators judge whether your project is truly innovative. They look for evidence that your technology or solution goes beyond the state of the art. That means you must provide, of course, clear data on performance and quality improvements, elaborate on the differences in plant design, operation, and reliability, describe very well the expected increases in technology readiness levels, so the TRL, and commercial readiness, and provide a transparent view of the technological and economic barriers that your project overcomes. The evaluators then compare your proposal against 3 main benchmarks. First of all, the commercial state of the art, meaning the most comparable and already available technologies. The technological state of the art, meaning the best demonstration or prototype currently at the highest TRL. And thirdly, other innovation fund projects, because they will check whether your claimed innovation has already been supported elsewhere. In practice, this means you need to show here is what exists today, and here is why it is limited, and here's exactly how our solution or our project performs better, and always supported by quantitative data. Now let's have a look at how to structure this section correctly in the part B of the application document. The section starts with the state-of-the-art analysis. Here you first describe the commercial state-of-the-art. So again, what technologies are on the market, who provides them, and what are their performance limits. Then you narrow it down to the technological state-of-the-art, comparing your innovation directly to any existing or under development solutions. So prospective competitors. You should then explicitly state the current TRL of competitors' technologies. What are their performance metrics, for instance, efficiency, production volumes, costs, or emissions, and also state why your project performs better or removes current barriers that exist with already available solutions. Next comes innovation beyond state of the art. This is where you detail what is new, unique, or combined in a novel way in your project. Include performance data from pilot or lab scale tests to demonstrate credibility. If you make a claim, for instance, 20% higher efficiency, you must show where that number comes from. Show experimental results, supplier guarantees, or validated models. And remember, the feasibility study is another key document here. It should provide traceable performance and data that directly support all of your claims. So what documentation should be attached to support this section? Evaluators expect concrete traceable evidence, such as publications, patents, or any technical articles confirming the scientific basis of your technology. A comparison of competing solutions, not only at European, but also global level, is highly sought after by evaluators. And lastly, a technology roadmap and the plan to reach TRL9. So explain explicitly how remaining technological or commercial gaps will be closed before full deployment, thanks to your Innovation Fund project. For example, if your project uses a novel electrolysis system, for instance, show the results of the TL6 to 7 prototype, outline what milestones have been achieved to reach the current TL level, and also show how you will further advance the TL scale and validate the system or the process at scale, and then provide a clear roadmap to full commercial readiness. Let's now move to the second major evaluation criterion, the GHG emission avoidance potential. This section is, as you can see here, is worth up to 12 points, and of course is therefore absolutely central to the total scoring. The Innovation Fund looks at 3 sub-criterion, as also mentioned in the previous slides. It's first of all the absolute GHG emission avoidance. So as we know, the total tons of CO2 equivalent avoided over 10 years of operation. It's the relative GHG emission avoidance, so the percentage reduction compared to the reference scenario. And very importantly, the quality of the calculation and the methodology used. So how credible, transparent, and well documented your assessment is. The key message here is that the numbers alone are not enough. So the evaluators care as much about the quality of the assumptions and clarity of the methodology as about the absolute result. To score well, your GHG calculation must therefore be done, of course, using the official CNEA calculator template and be aligned with the Innovation Fund emission avoidance methodology. No alternative methods are accepted. And also be credible by using detailed assumptions, which are always well documented. Once your calculator is filled, the quality of the GHG calculation is assessed in detail by external evaluators. They check whether you have applied the methodology correctly, whether your assumptions and data sources are credible and traceable, and whether the margin of uncertainty is acceptable. If the calculation contains gaps, for instance, missing input data or unclear project boundaries, your score under this criterion is immediately reduced. And if the methodology is even misapplied or the form is incomplete, your proposal can even be rejected outright for not meeting the minimum threshold. Another critical point is the minimum relative GHG avoidance required for eligibility. For most topics, that's at least 50% relative emission avoidance, and even for pilot projects, it's 75%. Projects below those thresholds are automatically ineligible. So even with strong innovation, if the GHG section is weak or inconsistent, the project will not pass. So what would a strong GHG section actually include? There are 2 main deliverables, the GHG emission avoidance calculator and the Part B narrative, which explains the logic behind your numbers. Part B should therefore cover the methodology you used, the absolute and relative GHG avoidance results, including a detailed description of the assumptions used, and the short justification of the minimum requirement, for example, showing how you meet the 50 or 75% relative avoidance threshold. In parallel, the feasibility study is another key document and should include a short techno-economic analysis that further validates your assumptions and puts them into context. For instance, energy use, efficiencies, and material balances. This alignment between those 3 files, Excel file, Part B, and feasibility study, is essential. When evaluators see internal Consistency, meaning the same number, same logic, and same traceable resources across those 3 documents, they mark the proposal as credible and well prepared. To summarize, a high-quality GHG calculation always rests on sound and transparent assumptions. You must describe the reference scenario assumptions, what happens if the project isn't implemented, and the project scenario assumptions, so what changes when your innovation is introduced. Each parameter, energy input, process yield, raw materials, or even transport distance for supply of feedstock, should be clearly documented. Evaluators also expect supporting evidence, so any scientific or technical sources, measurements, or pilot scale data, third-party verification or certifications even, are highly welcomed. In the best case scenario, applicants can include life cycle assessment or LCA type studies, or even an independent GHG assessment to substantiate the results. The more traceable your data, the more confident evaluators are that the claimed savings can actually be reached, and the higher your score on credibility will be. We now move to the project maturity criterion, the third major part of the Innovation Fund evaluation, and based on our experience, the most difficult section for applicants typically. This section assesses whether your project is ready to be implemented, not only technically, but especially operationally and financially. Evaluators want to be confident that the project can realistically deliver its promised outputs, achieve its milestones, and reach financial close within the expected time frame. There are 3 dimensions here. So it's the technical maturity. Can the technology actually achieve the expected output and GHG avoidance? Operational maturity, is there a credible plan to execute and achieve milestones? And financial maturity. So does the applicant or consortium have the credibility to structure and secure financing as planned after the grant is awarded? For today's focus, we'll go deeper into technical maturity, which accounts for 5 points, but carries high weight because it's often where strong proposals fail. So let's start with the technical maturity on the next slide. As we know, the Innovation Fund supports mature technologies, not early stage concepts. That means your technology must be technically feasible. It can realistically deliver the expected product volumes and the projected GHG avoidance. 2 main aspects are assessed. So first of all, it's the feasibility to achieve outputs, including the design of the processes, validation of core technologies, and data demonstrating that performance has been achieved at pilot or demo scale. Secondly, it's the risk identification and mitigation, showing that potential technical bottlenecks have been identified and there's a credible plan to address them. For example, if you're scaling up a novel hydrogen production process, evaluators expect to see performance data from previous pilots, supplier guarantees for critical components, such as electrolyzers or catalysts, and engineering validation that the process can operate continuously at industrial scale. The solid risk section is also key. Simply stating risk of equipment delay, for instance, is not enough. So you must quantify the risk, identify its source, and describe a mitigation measure that's technically credible, such as having a backing up supplier or using modular construction, for instance. Let's look at what evaluators expect in your Part B and feasibility study for this criterion. You need to describe, first of all, the current TLF of your technology and the roadmap that got you there, including validation steps, pilot operations, and test results. You also must describe whether the technology has already been proven at pilot or demo scale, and if so, under what operating conditions and for how long. And also the roadmap to full commercial readiness. So describe how each subsystem will scale and which suppliers or partners are responsible for de-risking those steps. For instance, a project claiming to be a TL8 should show evidence of sustained operation in a relevant industrial environment, not just lab results or short-term tests. Your narrative should connect the technical design, mass and energy balances, and plant configuration. Each claim in the narrative should be supported by data, empirical data, measurements, efficiency curves, output quality tests, or integration performance. Evaluators will definitely pay close attention to your TL progression logic. They expect to see a consistent and evidence-based explanation of how the project evolved from a TL 6, for instance, to 7 to 8. And inconsistencies, as always, are a red flag for evaluators. So how do you avoid these possible pitfalls? Well, by ensuring that your documentation is complete, coherent, and traceable. Here's what must be included. In the application form and part B, sections describing your technological scope, main components, and design philosophy. Section 4 on project maturity, where you should explain the technical approach, the readiness, and risk mitigation. In the feasibility study, so the mandatory annex, applicants must provide a clear technical maturity assessment, where you describe the previous and current and future TL activities, add supplier references, and, of course, previous test results. In addition, applicants must provide in the feasibility study a techno-economic analysis showing performance, efficiency, and cost at full scale. And also a technical risk and mitigation plan must be included in the feasibility study, including a heat map that quantifies the likelihood and impact of each risk. Optionally, applicants can add any due diligence reports, LCA-type studies, or third-party verifications. The feasibility study is indeed the cornerstone here. It must tell a consistent story from input to output, backed by process data. Evaluators frequently cross-check figures between Part B and the feasibility study, so make sure these figures are always aligned. Operational maturity answers a very practical question, namely, can this project be implemented smoothly, on time, and within scope? While technical maturity focuses on whether the technology works, operational maturity focuses on execution. It looks at the project's implementation plan, the timeline, the permits, and the overall credibility of the rollout strategy. Here, evaluators assess whether there is a clear and realistic construction schedule from early development to full operation, if the key milestones and deliverables identified and logically sequenced, and if the necessary permits and regulatory procedures are already in place or at least well underway. Under this criterion, as for many other criteria as well, documentation matters. The proposal must include, for instance, a construction timeline showing how the project reaches full operation, and also an operational timeline detailing when targeted output volumes will ramp up, supported by supply and offtake contracts or letters of intent. In short, this criterion is really about turning a technically sound idea into a credible, executable plan. So what should a strong operational maturity section look like? In Part B, you need to present, first of all, a work plan that includes all key milestones and deliverables aligned with the Gantt chart, a clear description of the project management structure, so who is responsible for what and what structure is in place and how decisions are made, evidence that all necessary permits, licenses, and regulatory procedures are either secured or well advanced, a plan to secure public acceptance, including community engagement and communication with local authorities, and finally, an assessment of operational risks. So, for example, construction delays, feedstock interruptions, or supply chain issues, together with credible mitigation measures and responsibility allocations. These elements should be cross-referenced in the feasibility study, which further adds information for the location analysis and rationale for the selected site, feedstock or energy supply plans, expected project output, and a description of operational risk management overall. Additional supporting evidence, such as the business plan, Gantt chart, and permits annex, will overall strengthen credibility. For the financial maturity, then, I would like to hand over again to my expert colleagues from the Nordic Innovators Corporate Finance team.
Thank you very much, Felix, and welcome everyone to this webinar. So Innovation Fund assesses the financial maturity across 4 key dimensions: The first one would be the soundness of the business plan and its profitability. In specific, we're looking at the business plan being coherent, realistic, and data-driven. In practice, this means that the assumptions on CAPEX, OPEX, revenues, and market prices must be backed by evidence. For example, supplier quotations, market studies, or letters of intent. The next key dimension would be robustness of the financing plan. In specific, we need to answer on the question, can this project actually be financed and built? It's about credibility. So here the fund assesses whether the financial plan covers both the construction and operational phases, and whether the capital structure is balanced between equity, debt, and the grant part. In reality, we should show consistency between the sources and uses of the funds, realistic debt terms, and credible evidence of co-financing, such as, for instance, investor discussions, term sheets, or bank engagement letters. As the third part, we are looking at the commitment of the funders. So the fund wants to see that shareholders, investors, or lenders are genuinely committed, not just on a shallow matter. This is typically demonstrated through letters of intent, boards of approval, internal memos, or maybe even highly defined term sheets. The more concrete and specific the support, the higher the project scores on the financial maturity. It's all about the level of detail. So for the projects that are not yet cash positive or depend heavily on the grant, this element actually becomes even more critical. It shows that the backers are ready to carry the risk and stay invested through the financial close. From our experience across multiple innovation fund applications, evaluators actually expect a higher level of detail in every attached document. I think Felix mentioned that several times as well. Even if a letter expresses strong interest, if it lacks concrete information, such as, let's say, the committed amount, the investor's share of the total CAPEX or expected steps, and timing towards the FID, TINEA may treat it as generic and score it within the category insufficient. The same principle actually applies to offtake, supply, and EPC letters. We have also seen that projects have been penalized even when the letters were supportive, simply because they lacked the essential details such as project scope, indicative pricing, expected volumes, and product specifications. As the last but definitely not least, we're talking about the risks, project risks, and their mitigation. So it is perfectly normal that every project carries risks. It is more about defining how to deal with such risks. In this case, we would be strongly suggesting running sensitivity analyses, and implement them in the financial model. For example, testing what happens if the CAPEX increases by 10%, revenues fall by 20%, and so on and so forth. So the outcome should demonstrate that the project can remain viable and deliver in its climate impact, even in less than ideal circumstances. Filippo, over to you.
Many thanks, Jan. Now let's focus on how to address this financial maturity within the application. And let's begin with the business plan, which is again a mandatory annex. There are several sections of the business plan annex which back up the project financial maturity. All the key information provided in the executive summary and business proposition provide an overview at a glance of the soundness of your business and value proposition, its unique features and competitive advantages, and hence the potential to gain market traction and being fast adopted by the market and customers. Financial assumptions, cash flow, and profitability analysis need to mirror and justify from the narrative perspective all the key parameters and assumptions that have been used to build your financial model, breaking down the CAPEX and OPEX cost items, explaining the methodology for calculating them, and clarifying the revenue model and the rationale behind the discount rate, the WACC, applied for this specific project. Project counterparties and contracting are also key to show the involvement and commitment of the whole project value chain. Among them, key suppliers and technology partners, and of course, the key investors and prospect of takers. Their concrete involvement need to be reflected also in the annex addressing the letters of support. Financing plan, again, needs to be fully aligned with the with and provide a narrative description of the figures dropped within the detailed financial model. And the risk analysis and management, as already highlighted by Jan, need to acknowledge that all potential risks, and especially those directly related with the sensitivity analysis of your financial model, have all been properly addressed with specific mitigation measures. Beyond the business plan, the financial maturity is also backed up by several supporting annexes. The terms of supply provide evidence of the financial assumptions for cost and revenues, and this can be outlined via the cost assumptions of the complete project fee study, but also quotations from suppliers, memorandums of understanding or offtake agreements from customers. The project funding support includes letters confirming financial commitments of ongoing financing negotiation from investors, banks, or funds, comfort letters, and the like. The shareholders' financial resources demonstrate the capacity of shareholders to contribute with equity, and for this also the balance sheet, cash reserves, or letters from boards may confirm these capital allocations. Of course, the relevant cost calculator and the detailed financial model represent also the baseline for the financial maturity and the need for full consistent with the arguments that are being dropped in the Part B, as already indicated. Finally, the Part B, as the main application document, also contain a summary of the financial robustness of the project, the investor readiness, and the funding commitment that have been already achieved. And also, for instance, in the section 4.4 regarding the risk management, there is a summary of the main financial risks and the mitigation measures and contingency plans. All these documents provide the proof necessary for evaluators to believe in your financing strategy. Let's now move to the following criterion, the replicability one. And as already introduced, this is broken down into three main sub-criteria. Evaluators will assess each of them by looking at different aspects of the project. In the case of efficiency gains and environmental impacts, for instance, the capacity of the project to efficiently use or even substitute critical raw materials, or its potential contributions to circularity and recyclability, for instance. We can also leverage the project's potential contribution to biodiversity protection or other environmental impacts beyond the greenhouse gases avoidance. And all this information needs to be reliable and verifiable with scientific or empiric evidence. The second sub-criterion analyzes the capacity to further deploy and scale up the project's results, replicating or transferring them to other locations or even to other industrial sectors. For this, it is essential to demonstrate that there is a clear replication plan across different regions and potentially also different industrial sectors, both within the EU and globally. On par with the replication potential, we should also quantify the corresponding emissions avoidance potential of such replication plan, taking as a baseline the calculations done for the specific project and multiplying them based on the envisaged production volumes when the project will be either scaled up or replicated in other locations. The project's contribution to the industrial leadership and competitiveness should be supported by arguing how this will generate synergies with the current industrial sector or even facilitate the creation of new value chains and industrial ecosystems in Europe. Additional contributions may also refer to strengthening the resilience of the European supply chain and reducing dependencies on non-EU critical imports, among others. To address replicability successfully, these arguments and contributions need to be presented across multiple documents of the EU Innovation Fund application. Among them, in section 5.1 of Part B, the main application document, an entire section is devoted to this criterion and where you discuss each of these sub-criteria individually. Section 5.2 also covers the knowledge-sharing activities of the project, including communication, dissemination, and also the visibility strategy of the project as a whole. Supporting documents also include, of course, the business plan with its market analysis, competitor benchmarking, and rollout strategy, leading to this subsequent scaling up of the project results and its potential replication elsewhere. The feasibility study should also confirm the resource efficiency and scalability of the project, whereas other optional annexes include letters of support or memorandum of understanding from partners interested in replication, or any replication or deployment studies that may have been conducted as part of the project application. Let's now move to the following criterion, which is the cost efficiency. And this, as we already learned from the previous sessions and also from today's reminder and previous slides, this criterion measures how effectively your project uses public funding to deliver climate benefits. It uses the so-called Y ratio, which practically, as we can see, where the numerator includes the grant you request, plus any additional public support, such as, for instance, also national subsidies or state aid, during the first 10 years of operation. The denominator is, on the other hand, is the project's absolute greenhouse gases emissions avoidance. When calculating the cost efficiency criteria, please bear in mind the following rules. You may request a maximum of 60% of the relevant costs of the project as part of the Innovation Fund grant. Additional public support must also be included in the numerator. The greenhouse gas avoidance figure must be the same as the one used for the emission avoidance scoring. And for the 2024 net zero technology goal, the scoring formula is the Y factor is in the following way. If the Y factor is lower than 200 euros of grant per each ton of CO2 equivalent, then the score is 12, which is the maximum score that can be achieved under this cost efficiency criteria, minus 12 multiplied by the Y factor and divided into 200, these 200 euros of grant per ton of CO2 avoided. The score is then rounded to the nearest half point. So if, for instance, your score is, say, 11.76, then your score will become 12. On the other hand, if the Y factor is higher than 200 euros per ton of CO2 equivalent, then the score is automatically 0, leading to rejection. In addition to the numeric score, up to 3 points are awarded for the quality of the calculations, which depends on the credibility of the costs and the GAG data, the completeness of the calculator and the methodological consistency. And overall, the minimum threshold that needs to be achieved for this is 1.5 points. Errors or missing data lead to the rejection of the proposal. All in all, your objective is to maximize your project efficiency by keeping your grant request as low as possible when compared to your emission avoidance, while ensuring data accuracy and transparency. To document your cost efficiency calculation, there are several documents that back up it, and among them, for instance, if we take a look to the application form, this is summarized practically in two main sections. The section 2.4, which summarizes the absolute greenhouse gas emissions avoidance, and the section 4.5 that specifically addresses and summarizes the cost efficiency calculation. Other supporting annexes that are relevant for this purpose are, of course, the relevant cost calculator, which represent the baseline for the calculation of the relevant costs of the project, the detailed financial model that, again, needs to be fully aligned and consistent with the relevant cost calculator, and on the other side, the greenhouse gas calculator, where the overall figure of the greenhouse gas emissions avoidance value is calculated and will be eventually used in the cost efficiency criterion as the denominator. Very important reminder, in general, we need to cross-check the consistency in between all of these documents. All the figures dropped in between across the Part B, the relevant cost calculator, the financial model, and the greenhouse gas calculator. All the figures and the assumptions must match exactly. Now it is the turn. We have reached the final point of our presentation, where my colleague Felix will summarize the key takeaways of today's session.
Thank you, Filippo. Yes, let me close with a few takeaways about the application package. So one of the most important points for the Innovation Fund is that the proposal is not just a single document, as you have noticed during this webinar, but a coherent evidence-based story told across several mandatory components. Each document has a clear and distinct role, and the evaluators expect full consistency between them. First, you have the Part B, roughly 70 pages, which is the narrative core of your project. It is then supported by the feasibility study and the business plan, each around 60 pages. The feasibility study provides the technical and economic justifications behind your assumptions, while the business plan translates the project into a realistic route to market, a financing structure, and long-term operational strategy. In addition, the two calculators are absolutely critical, namely the GHG calculator, which must strictly follow the Innovation Fund methodology, and the relevant cost calculator, which determines your maximum grant and must match your detailed internal financial model one-to-one. To wrap up the evaluation logic on the next page, the Innovation Fund uses strict and cascading criteria, as we have seen. This means that if your project fails the minimum threshold in innovation, GHG avoidance, or project maturity, the evaluation stops immediately, no matter how strong the other sections are. There are 5 main award criteria, as we have seen: innovation, GHG avoidance, project maturity, replicability, and cost efficiency, plus a small number of bonus points. What we see in practice is that the biggest pitfalls are always the same. So it's the weak financial maturity, poor quality or inconsistent GHG calculation, or a lack of consistency across all documents. If you can get these 3 aspects right, you dramatically increase your chances of scoring competitively. Let me then finish by highlighting what we consistently see in successful Innovation Fund projects. Those projects score well because they demonstrate strengths across 3 main pillars: maturity, impact, and innovation. On maturity, projects typically come in with TL 6 to 7, backed by real test data, completed pre-feed or started feeds, or FEL 1 or FEL 2, a clear permitting roadmap, and a strong commercial traction regarding secured offtake and financing confirmed. On impact, the best proposals deliver high GHG avoidance, of course, using conservative assumptions, supported by documentation and any other backing up credible documentation, such as solid LCA studies or GHG evidence-based assessments done internally. And they show a competitive cost efficiency ratio as presented by my colleague Philippe. And finally, on innovation, winning projects show a meaningful, let's say, leap beyond the EU state-of-the-art, combined, of course, with a credible potential for scaling across different value chains. If your project can demonstrate strength in these 3 areas, your chances of being competitive in the Innovation Fund increase considerably. That brings us then to the final part of today's session, Q&A and discussion. So we have highlighted the key documents, criteria, and common pitfalls. So this is your chance to ask anything that needs clarification. So please feel free to jump in with any questions you might have. Thank you very much.
And if we can't answer all your questions now, please also feel free to reach out to us. We will be glad to solve your doubts and make a free initial assessment of your project ideas.
indeed, we could also take, let's say, the list of questions from the chat. Starting from the top, I see at the very beginning there was a question on what being on the reserve list implies. So basically, those are the projects that would have scored sufficiently to be awarded, but due to, let's say, the current year's budget limitations, could not enter, let's say, the list of winning applications, and therefore are provisionally put on reserve list, and then would move up to the winning applications in terms of, or whenever a project would not manage to sign the grant agreement, which typically is the next step after you have been pre-selected. The SINEA project officers would start the so-called grant agreement preparation phase with you, with the aim, of course, to sign the grant agreement and then officially kick off the project. If there are projects that cannot manage kind of to find an agreement with SINEA, those projects then would be cancelled, and then the reserve list is there to move up, let's say, the other high scoring projects. We could also give, I think, a statistical data. The rate of projects not managing to sign the grant agreement is increasing every year. I think in the last round we had 10% of the projects, or more or less 10% of the projects that had been pre-selected, so awarded, and then entered the grant agreement preparation, could not finalize the grant agreement due to several reasons.
Many
And
thanks,
now-
Felix, for the... please go on.
Yeah, please. The next question, if there's no follow-up question related to whether to include IP rights and the option to patent those innovation fund results. Of course, innovation always can be nicely backed up by showcasing that patents have either been filed already before submitting or granted. So that's indeed something that also can be nicely leveraged for the technical risk section, operational risks, financial risks as well. So the more of, let's say, the key technology components are patented, the higher overall and the maturity and overall innovation will be scored by evaluators. Therefore, it's also mandatory in the feasibility study to add a patent list, so a list of the key equipment patents that have been awarded so far.
There is a following question regarding any official minimum requirement for the greenhouse gases avoidance calculation. Well, we've been going through those. We may say there are mainly two. From one side, regarding the relative emission avoidance, for instance, this has to be 50% as a general minimum, 50% as a general rule of thumb for, let's say, conventional projects, and 75% when it comes to pilot projects. So this is these are the two main thresholds. Plus, of course, there is no specific threshold for the absolute emissions avoidance per se, but it goes without saying that this is very tightly linked to the cost efficiency criterion. So in the end, the minimum threshold that we could at least mention here is this 200 euros per ton of CO2 equivalent avoided to the atmosphere when it comes to general projects on the net zero technology scope, and the threshold of 2,000 euros per ton of CO2 equivalent when it comes to the pilot projects. Also, we have to remark that, as you learned today, in case of meeting this threshold or very slightly lower than this, the project score under this specific criterion will be close to zero, and as such, it will not be a very competitive project. So let's say the benchmark in those specific cases should be rather way below these maximum thresholds to be achieved.
I can also follow up on this question that for all our clients, for instance, starting to scope a project for the Innovation Fund, we always link, let's say, an early early stage assessment of the GHG potential to previous winning applications on the Innovation Fund, because the absolute GHG emission avoidance figure is something SINEA typically publishes for winning applications, and that's indeed a nice reference data to compare projects with, and give a first benchmark regarding the competitiveness of a project regarding Innovation Fund grants. Indeed, that was then directly linked to the following question in the chat. So, are there any official reports that summarize how winning applications perform in terms of GHG reduction efficiencies? Indeed. So those figures are available for all selected and granted Innovation Fund projects.
There was another question, again related with the Y ratio and the cost efficiency formula. Is the absolute greenhouse gas emissions avoidance for the project lifetime or for 10 years? It is for the first 10 years of operation only. No, so it's only based on the first 10 years emissions avoidance. There is another question. What happens if a project do not manage to produce the CO2 reduction granted during the 10 years of operation? We addressed this aspect, I think, at the very beginning of this presentation, also in the previous one. So the minimum target for the GHG avoidance that the project needs to meet is 75% of the claimed emission savings for the first 10 years of operation. If a lower amount is achieved after the reporting and so on, then the grant amount will be decreased accordingly in a proportional manner to this corresponding decrease in the greenhouse gases avoidance.
I see another question relates to consortium recommendations, which in fact also was the topic of the first webinar. In one of the slides, we presented how typical consortium structures could look like for different categories on the Innovation Fund. Here, this question relates explicitly to the pilot category. Indeed, having a partner that is proficient in assessing impact, GHG impact in specific, is a good approach. Of course, the consortium recommendations, they are project specific. It must be partnerships that help to pursue the project as planned, that support, let's say, also the timeline targets and the milestones that are presented in the proposal. And if milestones are linked to calculating GHG, so such a partner, a research partner, even could partner up with independent verifier, for instance, to basically facilitate the GHG emission avoidance calculations once the system is into operation, or even help you in deducing any, let's say, other GHG saving potential, which then, as was presented by Filippo, can bring you bonus points. So that's indeed something that could provide additional credibility to evaluators. Yes.
There is a specific question for the DIA support, the 25 hour support. Maybe Olivia, you want to address this?
Yes, I can address this one. Yeah, so it's available for Danish applicants that are seeking to apply funding for a Danish project taking place in Denmark. So you have to be a Danish applicant with the Danish project.
Many thanks.
Yeah, maybe I can add that it also we have a specific list of consultants that are pre-approved to perform this consultancy as well. And the list is on our website.
So follow-up question regarding the start of the project validation exercise. Could start actually ahead of the current call publication. Is this correct?
Yes.
Correctly
Yeah,
assumed?
you can start that before. It's open now to apply for the validation assessment and our fund as well. That is up and running, and you can start before the call is announced in December 3rd.
Maybe we can just complement to say that, of course, the official call hasn't been published yet. Nonetheless, based on our previous experience from the previous calls and so on, some modifications, some adjustments in the main application documents or in some specific requirements have been done. For instance, luckily, some of the previous application documents that were in the past compulsory, like the knowledge sharing plan, do not exist any longer from the 2024 call onwards. But still, the backbone of the program is practically the same since its first publication. So an initial assessment can be already performed already now with a certain degree of security that it will align also with the main aspects, the main pillars of the 2025 call as well.
Seems that there are no further concrete questions. But of course, as introduced by Filippo, if any of you have follow-up questions that you would like or prefer to discuss individually, please feel free to reach out. Of course, also the A team is available for any questions regarding the process for applying for both supports, the viability analysis, and then also the full application support. We are of course very happy to answer any of your potential follow-up questions. And then just again the information that there is a third masterclass coming up, 8th of January, which will be about key tips and tricks in order to prepare competitive and winning applications. Again, with further details regarding, let's say, how to convince evaluators, and we will even go into concrete comments received for proposals, and showcase how to address, let's say, the main pitfalls and the typical questions evaluators will want to address. And so if there are no further questions, I think we can conclude here. Again, thank you very much for all the participation, all the questions in this part of the webinar. And yes, we're very much looking forward to giving you this third webinar on 8th of January. Right. Then, yeah, if everyone agrees, I would end the event here. And yes, wish you a great rest of the day. Thank you.
Thank you all.
Thank you.
You all.
Thank you very much.